Recently, one of the hottest topics in the A-share market has been the double crossover of Kweichow Moutai, long considered the benchmark of value investing, by an optical module company that on June 18th, Zhongji Innolight's stock price surged, closing at 1,367.88 yuan per share, with a total market cap reaching 1.526 trillion yuan, surpassing Kweichow Moutai's 1.519 trillion yuan and ranking 6th in total A-share market cap. Earlier, on June 3rd, Zhongji Innolight's stock price had already exceeded Moutai's during intraday trading. In other words, the company achieved a crossover against Moutai in both stock price and market cap. Moreover, this market cap also exceeded that of AI industry chain core companies such as Capex. Compared with internet companies, it also ranked above a group of top internet enterprises including Meituan, JD.com, Baidu, and Xiaomi. However, that peak on June 18th was more like a temporary lead. In the following trading days, Zhongji Innolight's stock price pulled back. As of the close on July 1st, its market cap had fallen to about 1.36 trillion yuan, once again below Kweichow Moutai's roughly 1.49 trillion yuan. Yet this double crossover is already enough to prompt a re-examination of the pricing logic for A-share core assets. In the past, the market was willing to pay a premium for consumption stability. Now, capital is paying a premium for key positions in AI infrastructure. After all, in the A-share context, Moutai has never been just a company. It has long represented the most stable type of investment aesthetic in the A-share market. Brand, distribution channels, cash flow, profit margins, and the certainty to weather economic cycles. So, what exactly supports Zhongji Innolight's high valuation? How could it surpass Capex and approach Foxconn Industrial Internet? Behind this surge, is it an industry revaluation or a valuation bubble? And how long can it last? Why Zhongji Innolight is expensive? The most direct reason for Zhongji Innolight's high stock price is that optical modules have reached a critical node in the expansion of AI infrastructure, becoming a tangible high-demand component within that infrastructure. In a large AI cluster, thousands of GPUs need to work together. Model parameters, training data, and intermediate computation results must flow at high speed between GPUs, servers, switches, and racks. The more chips there are, and the larger the cluster, the greater the pressure on data transmission. Take NVIDIA's NVL72 rack-level system as an example. Whether it's the already widely deployed GB200 NVL72 or the upcoming GB300 NVL72 and Vera Rubin NVL72. The core concept is to connect dozens of GPUs and CPUs into a unified whole through high-speed interconnects like NVLink and NVLink switch. Once the transmission becomes a bottleneck, computing power goes to waste. This is why, when cloud providers expand AI clusters, demand for switches, network interface cards, and high-speed optical modules is pulled along simultaneously. This is what the industry calls a scale-out, meaning expanding a large number of servers and chips horizontally into larger clusters. In this process, both the volume and speed of optical modules are rapidly driven up. Over the past few years, the optical module industry has been talking about upgrades to higher speeds. In the era of large AI models, as cloud providers expand GPU clusters and demand higher data transmission between servers and switches, high-speed optical modules have moved from an industry technology roadmap to real orders. From a financial perspective, Zhongji Innolight has already turned AI infrastructure demand into tangible revenue and profit. In 2025, the company achieved revenue of 38.24 billion yuan, a year-on-year increase of 60.25%. Net profit attributable to shareholders was 10.797 billion yuan, up 108.78%. Gross margin rose from 34.65% to 42.61%. By the first quarter of 2026, growth accelerated further. Revenue reached 19.496 billion yuan, up 192.12% year-on-year. Net profit attributable to shareholders was 5.735 billion yuan, up 262.28% in the Q1 report. The company attributed the revenue growth mainly to end customers' strong investment in computing infrastructure and sustained growth in product shipments. In subsequent investor communications, the company explained the source of this profit elasticity. In Q4 2025, shipments of 800G and other products continued to grow quarter-on-quarter. 1.6T products began shipping to key customers in Q3 2025, with faster volume ramp-up in Q4. By 2026, the company expects large-scale demand and shipments for both 1.6T and 800G optical modules. 800G and 1.6T refer to the data transmission rates of optical modules. 800G means 800 gigabits per second, and 1.6T means 1.6 Tbps per second. Higher speeds mean wider data highways inside the data center. For cloud providers and AI companies, this affects not only training efficiency, but also inference costs. This is the key to the market's reevaluation of Zhongji Innolight. While many companies are still in the stage of may benefit in the future and are building capacity, Zhongji Innolight has already written AI orders into its financial reports. Its Q1 2026 net profit of 5.735 billion yuan already exceeded its full-year 2024 profit of 5.171 billion yuan. This is the core logic behind the market's willingness to give it a high valuation. Investors are buying into the delivery of real earnings from this AI infrastructure expansion. From the demand side, Zhongji Innolight's growth corresponds to the continuous expansion of computing infrastructure by major global cloud providers and AI companies. In 2025, overseas revenue accounted for as much as 90.6% of its total revenue, indicating that its growth is highly dependent on overseas markets and directly benefits from the sustained investment of leading North American cloud vendors and AI computing customers. At the same time, the company has built a high-speed optical module product matrix covering 100G to 1.6T and possesses the capability for mass delivery of 1.6T high-end products. Therefore, when calling its stock price expensive, investors are focusing on the global expansion of AI data centers, the upgrade cycle of high-speed optical modules, and the company's entrenched position in the supply chains of top-tier customers. This also explains why it has even been able to outweigh Cambricon and some internet giants. Cambricon represents the scarcity of domestic AI chips. In Q1 2026, Cambricon's revenue was 2.885 billion yuan, up 159.56% year-on-year. Net profit attributable to shareholders was 1.013 billion yuan, up 185.04%. Growth is rapid and the imaginative potential is large, but compared with Zhongji Innolight, Cambricon's revenue and profit base is still small, and the market's pricing of it places a higher weight on domestic substitution and future potential than AS for the internet giants. The logic is different. Over the past decade-plus, platform-based internet companies have supported high market caps with user scale, advertising, e-commerce, gaming, and local services. But today, many internet companies are seeing slowing growth in their core businesses. Traffic growth has hit a bottleneck, and segments like food delivery, e-commerce, and local services face fiercer competition and profit pressure. In contrast, Zhongji Innolight is tied to global AI data center construction, which is exactly the growth area that capital markets are most eager to chase right now. The A-share aesthetic has changed. The most noteworthy signal from Zhongji Innolight surpassing Moutai is that the A-share market is redefining what a good company is. In the past, the core assets most favored by A-shares mostly shared several traits: simple business models, stable cash flow, deep brand moats, and clear industry landscapes. Moutai is the standard model within this system. It represents the long-term expansion of Chinese high-end consumption and also embodies a certainty premium. Investors are willing to pay for stable growth, strong pricing power, and high dividends. Even as the Baizhou industry faced pressure in 2025, Kweichow Moutai still achieved operating revenue of 168.838 billion yuan and net profit attributable to shareholders of 82.32 billion yuan, with a net profit margin exceeding 50% of that. Moutai liquor revenue was 146.5 billion yuan, with a gross margin as high as 93.53%. And it must be admitted that against a backdrop of slowing consumption growth and channel price volatility, Moutai still maintains extremely strong profitability. However, looking at the overall changes in the A-share market, the AI wave has clearly shifted the risk appetite of capital AS of the end of June. 5 of the top 10 A-share stocks by market cap were technology stocks, including CATL, Foxconn Industrial, Internet, Zhongji Innolight, Cambricon, and Hygon Information Technology. Another optical module company, Optical, also briefly entered the top 10. The presence of technology stocks in the A-share market cap leaderboard is clearly strengthening. On June 17th, at the 2026 Lujiazui Forum, CSRC Chairman Wu Qing stated, "Currently, the market cap of the A-share technology sector accounts for over 30%, and among listed companies with a market cap exceeding 100 billion yuan, technology enterprises already make up 45%. A number of high-quality, innovative companies have efficiently landed in the A-share market, and the trend of the capital market and new quality productive forces moving toward each other and mutually achieving success is accelerating." The driving force behind this revaluation is the continuous ramping up of AI infrastructure by global tech giants. Cloud providers are building data centers, AI companies are expanding training clusters, computing infrastructure is constantly upgrading, and capital is beginning to search along the industry chain for beneficiaries, from chips and servers to PCBs, switches, optical modules, and onward to liquid cooling and power. Correspondingly, in A-shares, Cambricon represents the scarcity of domestic AI chips. Foxconn Industrial Internet represents scaled delivery capability for AI servers, and Zhongji Innolight is positioned at the high-speed interconnect segment within data centers. The fiercer the competition among large models, and the larger the computing clusters become, the more easily the market will rediscover the value of these underlying hardware companies. How far can high growth go if this round of high valuation is to be sustained? Zhongji Innolight still needs to answer several more critical questions. The most fundamental variable is the pace of global AI data center construction. Optical module demand mainly comes from cloud providers and AI companies expanding their computing clusters. Over the past 2 years, overseas tech giants have continued to double down on AI infrastructure. GPU clusters have grown larger and larger, and the pressure of data transmission between servers, switches, and racks has risen accordingly, ushering 800G and 1.6T optical modules into a volume ramp-up cycle that's long. As this round of computing expansion continues, demand for Zhongji Innolight will remain supported. Once cloud vendors begin to rein in data center construction, changes in orders will quickly transmit to the company's performance. Moreover, the customer structure also determines the stability of this growth. Zhongji Innolight is deeply tied to North American leading cloud vendors and AI giants such as NVIDIA, Google, Amazon, and Microsoft, leveraging its first-mover technological advantages in high-end, high-speed optical modules like 800G and 1.6T. The company has successfully captured the optical communication dividend brought about by the global AI computing explosion. When major customer demand is strong, the company's growth is rapidly amplified. Once customers adjust their procurement pace, volatility is also magnified. High concentration brings high certainty, but also high sensitivity, especially against the backdrop of ongoing U.S. China tech frictions. This high concentration further amplifies external uncertainties. Looking further ahead, the optical module industry itself continues to evolve. 800G and 1.6T are only the protagonists of this cycle. There will be solutions with higher speeds, lower power consumption, and higher integration in the future. However, as AI cluster scales continue to expand, the connection methods inside data centers are also changing. New optical interconnect technologies such as silicon photonics, CPO, LPO, and OCS will all influence the industrial landscape in the next phase. Ultimately, whether Zhongji Innolight's high valuation can persist depends on whether it can continuously convert the order dividend from this round of AI computing expansion into product iteration, customer stability, and profit delivery.